IAS 41. This standard mainly talks about agricultural produces and biological assets. So what are biological assets? So before looking at biological assets, let me give you a rough description about assets. An asset is something that we control or something that bring a future economic benefit. So let me give you one tricky question. For example, let's say this person took a photo of this fox and sold the photo. This means this fox has brought a future economic benefit when he took the picture for this person. However, he no longer controls the fox because it's the fox which is found in. So the fox is not considered as his own asset under this ifrs rule standards. So if we look at the definition, now let's look at the measurement of an asset. An asset can be measured using different accounting standards depending on the type of asset. For example, for inventories, we can use IAS 2. It is a rule saying that you can value your inventory depending on the price or the cost you spent on it. For example, if you buy this specific inventory for $50, the value of this inventory is $50. For fixed assets or property and plant and equipments such as. So for this also, for PPE also, we use a rule based on cost, but IAS, in other words, IAS 16. IAS 16 requires to record property, plant and equipments as their cost, but we can calculate depreciation this time because property, plants and equipments can stay more than 1 year. However, inventories doesn't, because inventories are held for sale in less than one operating cycle of the business. But what about when they are a biological assets or a product that you can get from these biological assets? In other words, agricultural produces. We use IAS 41 for biological related products mostly, but sometimes there are a situation where we use IAS 16 and IAS 2. But IAS 41, unlike the other two principles or standards, IAS 41 always order to record the value at a fair value less cost to sale. What does it mean, fair value less cost to sale? So let me use one simple example to understand fair value less cost to sale. So consider you are a farmer and have these cattle, and then so you have too much milk to sell and you store them in these containers. So finally you will pack all of them and make ready to sell, and you will ship it to sell it in the market. So let me ask you one question here. Can you accurately calculate how much these cattle ate in order to give this much amount of milk? You cannot. So you can't use cost here. Rather, you can use a fair value. So after estimating the selling price of this, you can subtract costs to sell. That's why it's called fair value less cost to sell. So this rule is applicable because of the reason we have talked earlier. For IAS 41, it's applicable for IAS 41. To look at the biological assets in agricultural produce. Let me define it in this way to make it more simple. This hen is a biological asset and her product, the egg, is an agricultural produce. This cow is a biological asset and her product, the milk, is an agricultural produce. Again, this chicken is a biological asset, but if she had a chicks, this chick is not an agricultural produce, but it's a biological asset. So This cow is a biological asset, and this newborn calf from this cow is a biological asset. But now don't forget the process. This process is called production. Now we are talking about animals. So for plants we will have a separate slide. So for animals, if the process that these animals gives an agricultural produce, this is called production. The process these biological assets animals gives another biological assets animals is called procreation. Procreation is the process giving one biological asset from another biological asset, and production is giving an agricultural produce from one biological asset. So let us look at the third process. So think of it, what will happen if we slaughter this cow to get her meat? If we did that, she will die and we will get the beef. This time we call this beef an agricultural produce. So how do we obtain this agricultural produce? Through degeneration. So the process we used here is a degeneration: production, procreation, and degeneration. How about for the chickens? That's also the same way. Degeneration works here, and this food is an agricultural produce that's obtained from the degenerating the biological asset. So what I mean to say is we can yield this biological asset. In this example, in all of these three processes, we have used two animals only, that is a chicken and a cow. So if we have a cow in our company, we might yield that cow for production, for harvesting purpose, or for degenerating their life and get the beef. Or we might yield the cow to increase the number of livestock or biological assets we have. The same way for the chicken. So if these animals are held for the product for harvesting purpose in the process of production, we can call them as bearer animals. If we hold them for consumption, or in order to consume them by cutting or by stopping their life, this time we call them as consumable, because our primary purpose is to degenerate their lives and use them in another slide. So if we yield these animals other than this purpose, other than being bearer, consumable, and any other reasons than these three, we call them as others. For example, if this calculation, now you know that animals, biological assets that are animals, are called bearer, consumables, and others. So now I will tell you the reason why we classify them as bearer, consumable, and other. For what purpose? The reason is for recognition purpose. If they are bearer, their accounting treatment will be based on the standard of IAS 41. If the animal is, for example, if that or here, as we have said before, bearers are the animals that gives agricultural produce without dying through production or procreation, and if they are held for this purpose, we use IAS 41. For consumables are treated under IAS 41 again. These are something that can give us an agricultural produce by dying. Is the process. So the others are other sections. So here we do not get any agricultural produce from them, but we might get any other benefit. For example, let's sorry, I didn't give you any example about other section. We do not get any agricultural produce here, but we might get other benefits from them. For example, think of this dog. This dog will not give us any agricultural produces and it's not also a consumable animal. The reason why we hate this dog is just to protect, to notify our, just think of this dog as an alarm machine, something that can notify us when something happens. So we can say that the service we get from other animals is somehow related to property and plant equipment. That property and plant equipment are mostly treated under the rule of IAS 16 rather than IAS 41, which is the reason why we used IAS 41 for the other bearers and consumables are somehow their service is more related with biological nature. But so now if we have finished animal sections, now let's look at the plant. We will also classify plants as bearer, consumables and others.